All right, traders, good afternoon. This is Christian Farmer at Strawberry Trade Group, and this is your end of day market recap for Wednesday, April 2nd. It is not April Fool's Day today, but it seems like that's the kind of reaction that you're getting after hours, especially with the initial reaction after the tariff announcement, which was higher, and then completely the bottom fell out once the I don't know, tablet or of tariffs came out. So looking at the screen here really quick, well, let me give you the risk disclaimer first. Everything that I'm going through in this video is for information purposes, only, not giving any advice or recommendations. Please read the full risk disclaimer there. So, a pretty nice, I would call it risk on day. I thought that this was a lot of short covering today. It's what I mentioned in my midday note as well, that it was a decent amount of short covering. And then today, which was a little bit different, than what I thought, and going back to last night's video, I thought we were going to have this tariff announcement was supposed to be at 3 o'clock today. It moved obviously till 4 o'clock, so after hours, but I thought we were going to have like, perhaps like a dull day today, and then we might see something like this in the after hours. But we got this intraday today, and that's what it felt like to me. We know, things that we know. That's how I always kind of what I start with sometimes in these videos, just overall market analysis is what you know and what you don't know, because obviously we were dealing with a lot of uncertainty. What we did know was that hedge funds have been shorting, a lot of growth names. I think there's various reports out that you could see. I'm not going to bring them up in this video about how much hedge funds have been short or how much they are short. So uncertainty works both ways. If there's a lot of longs in the market going to event, sometimes there's scaling back of those longs. If there's a lot of shorts in those that are exposed to an unknown event, sometimes you see short covering. And if you notice what you saw, like the biggest moves that happened after the open today were in some of the areas that have been knocked down the most over the last couple months. Crypto names, consumer discretionary, biotech, which was up 3.7%, which has gotten really crushed the last couple days. Leisure stocks, travel stocks, retail, software, cyber. These are all your beaten up areas. So this to me felt a lot like short covering. Partially, again, we never know 100%. And and even saw this, some call activity and things like, the Jets ETF, the airline ETF. And I think a lot of that is just like a lot of the call activity that sometimes that you see on the tape is just momentum. Like whatever's going up or whatever's going down. We'll see whatever's going up sees call activity. Whatever's going down sees put activity. That's half of the option flow. And that's why you saw those things today, because maybe folks thought it was the beginning of a move. So then what we kind of talked about was whether we were going to get little t or big T in terms of tariff announcement. And the first go of it, it looked like it was going to be little t, some reciprocal tariffs. And then, of course, they came out to be the second go of what became what you could call as big T, big, larger tariffs. Now, what I would watch, because again, this also, like the unknowns, I don't think go away, because you don't know what various countries are going to do in response to this. I would say one small positive is that I think with Canada and Mexico, there's nothing new that was announced there in terms of reciprocal tariffs. So we'll just kind of have to see how this plays out. One of the things that because I think there's a lot of unknowns, and I'm certainly not a tariff expert. You're probably not either. Watching this is we'll watch levels. Here's the 1 hour chart of the S&P, and again, sometimes I break it down, on a smaller time frame, especially when we've got some pretty erratic price action. So a couple of things that happened today was that we did charge higher, and I was posting like the 5-minute charts of some of these, and you could see that here was the day for today. We broke higher, but we then stalled like middle of the day, right at the bottom of the value area for the week. And again, I know this is a little bit confusing, but this bigger green box right now is the value area for the month. And the yellow box is the value area for the month, for the week. Sorry, value area for the week. bigger box here is the value area for the month. So we stalled. We stalled here at the bottom of the value area. Here was the initial reaction to what we thought would be smaller tariffs or little t. And then once we got the full announcement, the market sold off. So I think what we're going to want to watch here is whether or not this holds. You could see right now as I'm doing this video, we're actually breaking this 590.85 level. There'll be 45 minutes. It's right now it's 5:15. There'll be 45 minutes before this bar closes. Again, and that's 550, 85, which I think is going to be important to hold. If not, you might see a very messy overnight session. And you're probably going to get some headlines from different countries too, as there's going to be a whole bunch of countries meeting to figure out if they're going to retaliate, or whether they're going to negotiate, what exactly are they going to do. And I would also watch this area here, but I like to have the defined levels. So that's what I'm watching, 550.85. So that's SPY. And you're not going to see this when I go to the daily chart, but basically, you're going to have to imagine here a little bit. We're going to be back into this level. And again, look at the oscillation around the which I talked about in yesterday's video, around that value area for the year. I get questions sometimes about it's funny, the most questions that I get in these videos is sometimes I mention the bearish or bullish 80% rule using valuers. First of all, you can put that in your in Grok. You could Google it so that you get the definition. I did not come up with the 80% rule. That's a study that's been around for a long time using valuers. Remember, the value areas have been a thing for a bit, but they were primarily used for S&P futures and for a 5-minute chart. What I do for the value areas, or what the MarketWebs does, and Web Begol, who's the architect of the value areas, or MarketWebs. What we've done is we've taken that 80% rule that was applied to the 5-minute S&P chart, and we've applied it to stocks, and we've applied it to ETFs on multiple time frames. So what I wanted to mention here is that there's a important concept, and we went over this in the webinar that we had on, what was it, Monday night, that just before I play a 80% rule, which means like price action can go from one end of the value area to the other, once it's either starts above or once it starts below and it breaks into. I let the price action make sure that it's fully established. So like as soon as it says boom, like bearish 80% rule, I'm not going out and shorting. The price action has to firmly establish itself. And also when you've got a wider value area, you could discount that 80% rule, right? So you've got to put your thinking cap on a little bit. Just like with most of trading and trades, you've got to think about whether something firmly establishes itself inside the value area. So that's where we are, and so we're going to be back here testing this again. We went over as well in yesterday's video that the possibility of this was a double bottom. Possibility. One of the things that I said is you don't know whether it's a double bottom until you get to up here. Clearly, we're going to be testing this again. So that's the main thing I think to keep in mind, and to be patient. I'm going to go over cues as well. I think that's probably what the thing to do here is just to go over some levels to watch. Same thing. This is a bit weaker. We've already broken through the value area for the month. We got in there again, rejected at at resistance. And again, like this is going to happen, where you're going to attempt to break a level higher, and you're going to get rejected. So I would watch the lows from this week. If that doesn't hold, if you're shorting, watch 451. That would be your next level of support. That's about one, or possible support. That's 1.8% down. Remember, the VPOCs are where they're from other value areas where we haven't revisited. A lot of volume. So right in here is basically, it always arises from another value area where there's been a lot of volume that we haven't revisited, right? So that's where that level comes from. IWM looks a bit weaker, as it's done all year long, right? So here's where we are. I think this is still breaking down here. Let me just zoom in here a bit. Let's see if this will auto zoom in. I have to do it manually, but this is through those lows, and that's been this. Like I said, that's been the story all year long. So this is going to be getting. Speaking of the bearish 80% rule, you can kind of see what I mean here. Right? This was like it kind of hesitated a little bit in here. Right, back check this right in here, and it stayed inside value. Like that to me is more of a sense of like it's firmly establishing itself inside value. It did this once and then it came right back up. Right. So the longer that it sits here, like the more that it's, I would rely on that 80% rule, right? Whether it's the bullish or the bearish. But if something just sneaks in and then comes right back out, kind of like trying to put like a beach ball underwater, right? You don't want to say, oh my God, 80% rule, and I'm gonna look for this. So now that this is firmly established itself, and here's going to be another rejection, and I think this VPOC has been taken out here. That's at 194. So that was the next level of support. Yeah, so that looks like that's gone. So that's what you've got. So IWM is weaker. One other thing, so again, I'm going to be fairly broad here, because I think that this could be a very messy overnight session. One thing that I thought was very interesting, this is from Helene Meisler. This was a chart that she has used before regarding, I think, investor sentiment. Let me just bring up the. All right, so I took this as a screenshot from someone else's computer, but this is very interesting. And what this tells me is, so I think this is the cues here, and this is a sentiment cycle that I believe her mentor had invented or brought up, but it kind of, I know this is like hazy because again, I took it from a screenshot from somebody else, but look at how similar this looks, right? This is when upside exhaustion, then you begin to break down. There's a buy the dip here, but then you begin to break down. There's a little bit of panic, discouragement, wall of worry, aversion, deny as the market starts going up. Then there's denial. Look at where we are now. And I've had this I don't want to say argument, but debate, I'll say, with a lot of people on Twitter who look at like the fear and greed index and they see it in extreme fear and they think that there's really a big amount of fear in the market. I've argued against this or debated this a lot. I don't agree with that at all. I guess if you think that it's a great model for you, then have at it. Stay with it. But I think the fear and greed model is horrendous in terms of telling you if there's really greed or fear or greed in this market. This is more where we are, right? We've had this breakdown like this. We could go because I don't think, and I could show you various different things. I don't really want to get too far into this, into the weeds with this, but look at the equity put call ratio, right? This is another indicator where I tend to look to see if equity, if there's fear in this market, right? When there's fear, everybody's buying puts and they're buying puts in single names, right? And you could look and you could overlay this with an S&P chart. I'm not going to do it, but we really haven't had a major, we had some fear that came in here and the market rebounded from that. But, from a historical standpoint, this is not a big level of fear, right? And this is what happened in 2022, right? This is fear, right? When you get something like this, not this little blip on the screen. And again, we had it for one day, and you could go back and you could look at other periods too where the market has dipped or had a correction. So I'm not saying that this has to play out exactly the same way. But for goodness sakes, this is not fear in this market. This is a more, and I would also say that what she's showing you here with the sentiment cycle is more of like a deeper market correction. But you have to put things in perspective too. The market went up for 2 years straight, and I know a lot of people are comparing. They're saying like the third year of a bull market. And I'm not going to debate whether this is still a bull market or not, but let's just say it is, right? So the third year of a bull market is choppy, and it's usually a difficult year. So I think that you kind of have to put that in perspective, and that we could really just be here, right? And you have to be patient, and this could work its way out. So again, the reason why I bring this up is not to scare anybody or not to say that we're gonna this is going to play out exactly like this. But you have to have an open mind to different scenarios too, right? That we could have a very choppy couple of months, on our hand before things get straightened out and before the market goes higher. And why do I say that the market will go higher eventually? Because it always does, right? And I know that there's folks that put out stats. They're like, oh, when this happens, a year later, the market's higher. That's almost every situation out there. There's been certain other, situations that have evolved, like 2007 and 2008, where it's more of a prolonged downturn. But at the end of the day, like I shouldn't say at the end of the day because that's wrong. But as time goes past, the market will get back to new highs. It always does since the beginning of the stock market, unless you think that the world's going to end. But since the beginning of the history of the stock market in the United States, what happens over time? It makes new highs. But it might spend a good amount of time doing this kind of thing. And again, I don't want to say that this is going to, I don't like the analog comparisons. You can't overlay exactly to a T one time period from another because there's different circumstances. But you could get a whole bunch of shakeouts like this too. But if I had to guess where we were in the cycle of this sediment, yeah, we're probably somewhere around here. We've had a drop, we've consolidated, and either we start to go back up or we start to take another leg higher, another leg lower. And I think that you have to be open to the possibility that there could be another leg lower here. IWM is already doing it. So again, let's not read too much into the overnight price action. I don't want to scare anybody. I would say and SPY is trying to hold here. Another thing too that I see is that I don't see the VIX like spiking up hugely here. I think I have VIX. I don't know if this is closed. I don't think this is updated, but let's see if the VIX starts going back above 25. Here's a VIX chart. So again, while I'm waiting for this chart to come up here. I don't know what the story is here. Up, maybe because I typed in the wrong thing. I don't want to scare anybody at all. But now that if we start to break our recent range, you have to figure out what you're going to do next. Because we've been hanging in there, right? And like I said, in yesterday's video was saying, hey, it's possible that we have a double bottom on our situations. But if that's not going to be the picture, then you've got to make adjustments. But yeah, I mean, so far, we topped out again here right around 20. So why do I mention 25? Because I think we got very close to 25 and we backed off. If we begin to break higher than above 25, then that we're breaking higher and volatility is really starting to pick up again. If it stays around these lower 20s, perhaps this market could kind of weather through that. But I would really be paying attention to that 25 level. All right, guys. Clearly that wasn't the reaction that I was thinking again that this might be a buy the news situation. But the tariffs were a little bit higher than what I was expecting. I thought there might be, like I said, low T or little T. I think low T is funnier, but in any event, all right, we'll go from there, guys. We'll see what happens here in this overnight market, and I'll see you guys tomorrow.